It's Brian Preston, the Money Guy.
All right, next question's from Mark. He says, how do you factor a pension into your net worth statement? I'm blessed to be in a fully funded pension, but where should I be able to reasonably expect to receive 60% of my income at retirement? Sorry, so he is expecting to receive 60% and more of his income in retirement. So where does that pension factor into the net worth statement?
Yeah.
Can I add on something different? I think where does it come in the net worth statement, but also how does that affect your planning, right?
Yeah.
Like that's a pretty good, because people who have pensions, it's unique, it's different. How does that affect my savings rate? How should I think about that as I'm building?
Yeah, I'll address the question he asked first on net worth, and then we can talk about, because it does impact what your number is that you're planning for. Net worth statement, Mark. It's multifaceted. I'm going to go through this very quickly. If you have the option to turn this pension into a rollover, or you take a distribution to transfer it trustee to trustee into an IRA or something like that because they want to just get rid of the obligation, you can put it on your tax return. I mean, you can put it on your net worth statement. I'm throwing out every document. You put it on your net worth statement under retirement assets. So that's only if they give you annual statements with what your rollover or cash out option is on your pension. If that's not something that's available to you, this is more of a promise to you of what will be paid to you as an obligation of your employer for your retirement. And for that, because it's just a promise, it's not really an asset that you put on the assets or the liabilities or even, to figure out your net worth. You put it on the footnotes page.
That's right.
of a future anticipated cash flow that now, and this is where Bo was going with this, it's not a net worth component. It's actually a cash flow for retirement. So if you know you need $5,000 a month, but you have a pension that's going to pay you $3,000 a month, now you say, hey, when I'm figuring out my number, I only need the portfolio to generate $2,000 a month. So the number I'm trying to save for, what's my number for retirement, is significantly lower than if I had to come up with the full $5,000 a month all by myself. And that's the same way we talk about Social Security, we talk about pensions. If it's not something that's measurable annually, that gives you options to get to it from a legacy that goes beyond your life, then it's not a net worth asset. It's more of an obligation that you'll disclose on the footnotes.
All right, Brian, let me ask you a follow-up question to that, if that's okay. So if I'm someone who has a 60% pension coming my way, do I even need to save any more money? I mean, could I just rest on my laurels and retire? Because my retirement's already covered. I got a pension. What's the point of me even trying to save for the future?
This isn't important, especially the higher your income is and the higher your spending is. It's definitely something to take into account. Now, if you look at school teachers and others that that your pension is probably in your cash flow is not much above where Social Security is going to pay, you're probably going to be in a great situation, just because if that's where your spending is because your need is going to be so low. But I do worry about, because I can tell the story of, we had Delta pilots.
There we go.
That six-figure pensions that they were promised. But the problem is that the more that pension exceeds the Pension Benefit Guaranty Corporation, that's the backstop that the government has created at pbgc.gov. You can go check out what they kind of guarantee and put as a backstop. If your pension's greater than that, be very careful, because it's not uncommon with corporations and for them to try to get rid of those obligations, just like we saw with Delta, with the pilots, is they shedded that responsibility. And if you were counting only on that pension, you'd have probably been feeling pretty sour about the whole experience.
Yeah, what I love is that even if you are someone who has a pensionable benefit and it's great and it's super generous, and you are saving and you're still shooting to save for that 20 to 25%, what you're likely going to do is give yourself options more early in life, where maybe you thought, oh, I'm not going to be able to retire till I'm 65. Maybe by having additional savings, you get to check out of the workforce or enter into financial independence at 55 or 60 or some time before. I don't think there's anything wrong with that. More and better savings early often just leads to more and better flexibility and options later in life.